Hello, this is Connie Belden, and in this video, we'll once again look at ROI and residual income. In the previous exercise, though, average operating assets were given to us. So based on our information below, we're going to calculate, first of all, the average operating assets. Assume the operating assets do not include investment or undeveloped land. So what I did to help you out is I highlighted our operating assets in yellow. So that would be cash, accounts receivable, inventory, property, plant, and equipment. So to get an average, what I have to do is I have to add these four items together for the beginning balance, and then add them together again for the ending balance, and then average them. So I'm going to show you how I'm doing this. Okay, so the first thing I'll do is I will add together in the beginning balance cash, accounts receivable, inventory, property, and plant net. So I'll add 136, 342, 562, and 810. Okay, when I add that together, I will get 1,850,000. Now, I'm going to add that to, I'm going to add up the operating assets from the ending balance. So I cash 136, AR 490, plus inventory 476, and property and plant of 788. And that gives me 1,890,000 as the ending balance of my operating assets. So next I will add those together and then divide it by 2 to get an average. And that gives me an average of $1,870,000. Next, in part 2, I'm going to calculate margin, turnover, and ROI. Okay, so assume you're given the following information, and I've highlighted here because I want to point out that the net operating income is $785,400, the amount before interest expense and taxes. Okay, so the first thing we're going to do is calculate ROI, return on investment. So I'm going to take my net operating income, which is highlighted in yellow as $785,400, and divide it by my average operating assets, which I just calculated in part 1 was $1,870,000. When I do that, I come up with 0.42 or 42%. Next, in part 3, I'm going to calculate the residual income if we want a 15% required return. Okay, so that's going to be my operating income. And again, that is the $785,400. I came up with my average operating assets of $1,870,000. And I want a minimum return of 15%. Okay, so when I calculate it out, I will take $785,400 and subtract out. When I take $1,870,000 times 15%, I get $280,500. When I subtract, I get $504,900 as my residual income.